Hello guys, happy new Hello guys, happy new month. Shifu here with you again. Um we're having financial market focused for December. This is so typically sometimes when I want to like write about the financial market, like write in the forecast, I get to post on X, right? Post on Twitter, projecting what I'm looking forward to. I know that, but this time around, we're trying to see how I could create a consistent sort of coming up live to show either on a technical basis or also on a fundamental basis as well, right? And typically there's something I always explain about the financial market as a whole, and that has to be with when you want to look at the transfer of liquidity of assets from one platform to another. This is how you get to follow the flow of liquidity. So the first thing you want to see moving in the market, this is how you know that okay, we're in the right direction or in the opposite direction, is the bond yields, right? From the bond yields, I'm trying to see if I can type this. Okay. From bond yields, we have to see the markets move from bond yields to stocks, right? To stocks, which is referred to as equities. We move to stocks, and then we move to precious metals. Precious metals are commodities, more like commodities, right? Commodities falls under precious metals, so the gold and the rest of them all are in that category. And then we have currencies. I hope I'm not missing anything. And then we've got crypto. So crypto is always like in the last part of the chain. Crypto is always like in the last part of the chain. So the first thing you've got to see is, first of all, you've got to see coming bond yields. The flow of liquidity flows from bond yields, then stocks, then commodities, currencies, then crypto. So this is basically how it works, and sometimes not like set in stone, but if you can monitor the flow of liquidity from each of this asset class, you'll be able to know when the flow of liquidity is getting to hit crypto, next thing, right or not. It just gives you that a very broad clarity, and because we know that fundamentals is what moves the market. Fundamentals is the reason behind the market. Fundamentals is what the market is what all about, right? So basically, if you have nuclear about fundamentals, you want to learn how to do a little bit of reading regarding the world economics, what is happening in the world per se, what is happening in the financial market. It gives you a certain level of insight and clarity, so you are not confused, right? So a quick one, right? I just want to see how I can run through this very, 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 very quick. Very, very quick. So I want to do this, but it's not okay. So basically, the bond yields right now, what is happening for bond yields? The 10-year government bond yields, it's kind of going up in a way, right? Because we've got like the UK 10-year gilt yield about 4.48% as of today. We've got the US 10-year treasury yield around 4.0%. So there's more like a modest upward pressure on yields in the markets overall. And what is the implication of this is that the higher yields we have in the market, what this means is bonds. I believe you all know what bonds is. If you don't know what bonds is, a quick Google research is going to help you. What is bonds, right? When we have higher yields in the market, it means bonds are offering decent return. And when bonds is offering decent return, a part of the safe income liquidity is trapped into that. So a lot of people who want to, let's say, smart money, or people who are major the liquidity drivers in the market, it reduces incentive for risk assets. Risk asset. When we start seeing bond yields soften, or a major central bank pivot from the Feds, this is what increases the appetites of people, right? And then we start seeing that effect flow into equities, into commodities, and then we ultimately see that flow into crypto. Now, what is happening for stocks and equities at the moment? Because what I'm doing right now is like just giving a recap of what is happening within the sectors before we start looking at what could be happening for December, right? Now, when we look at stocks, we look at equities, which are more on the risky asset side. We're talking about the S&P 500 now, the UK 100, the FTSE, and all that. Now, as of right now, we can see that the global stock markets are kind of under pressure, more on the US futures and the European indices. All of them had a serious dip with based on the risks of sentiment. So let me see how I want to show the CFD charts. So I'm going to share that part of the screen. But for a very weird reason, it's being slow. Okay. Let me cancel the slow. I want it to be. I want to share my screen, but I have to. Something was a big file was getting downloaded, so I want to like share my screen on that. Same crazy market. Okay, I think I could share the screen now. Okay, fantastic. So if you look at the S&P 500, the S&P 500 is more of an example, right? It's just looking like an example for the global scale of things, right? Looking at the scale of things. So the global stock market has been under pressure since December. You can see how the drop has been, and how it dips because of the risk of sentiment rules. People are trying to be careful right now. A lot of people are trying to be on literally watch that. You want to watch that because people are trying to be one catalyst. It's more of rising expectations of a rate cut, right? Rising expectation of a rate cut by the Feds later this month may have boosted more on near-term asset class rotations and more of I think more of because we're expecting rate cuts in the later part of December, so it could build a lot of expectations around risky assets. But a lot of people are uncertain because of the US Fed that has been locked up for over 30 days. A lot of people are uncertain about growth, inflation, and earnings. And most of the data we have seen or receiving right now, a lot of this data is coming from uh what's the keyword to use now? A lot of this data is coming from past months, right? It's coming from past months, and then we've got a couple of analysts, right, who are like talking about sector preferences. A lot of people are shifting from just AI, because I think there was some reports that came from Nvidia, so that also affected it. So the implication of this, the implication, what is the implication? The implication means that a lot of sentiment right now are more of the neutral state, right? The sentiment of moving liquidity, right, from stocks to cryptos is more hanging in the balance, is more new, it's just neutral. However, one thing that could literally trigger this very well is the rate cuts and a couple of risk on statement from the crypto president himself, Donald Trump, could be super positive for the markets, and it's definitely could literally get to see that help uh, the market and help this asset classes very well. Then moving over to commodities. Now in commodities, we've got, that's where we've got the likes of gold, we've got the likes of oil. I have to look for I'm coming. So I can hold chart next. The gold chart is the next thing I would like to open. I would want to open the, what's it called now? The oil, but I can't even recall the ticker again. But I think I'm going to do that. But when talking about commodities, we're more like talking about gold, they're talking about oil, they all fall under the category of both. Yeah, I'm coming. My okay. Um, so about precious metals, we're seeing gold is rallying, silver is rallying really high, and I think it's because a lot of people, a lot of us, were expecting lower interest rates this month as well, and lower interest rates always like weakens the dollar, and it makes this metals really more attractive. Although crude oil on the other hand is more like very weak to mixed. And over the past like between 2024, 2025, we've got like crude has really fallen down recovery, right? Because of more of a supply side discipline, right, from OPEC and getting priced in. So the implication of basically commodities, what we're talking about oil now, gold and the dollar, the pressure on the dollar right now is liquidity could be rotating into hard assets, right? Especially metals, right? Especially gold, silver, rather than risk assets. So people are literally rotating more of their funds into metals, hard assets, than risky assets. So at the same time, except we've got the risk on sentiments, capital is flowing away from speculative classes more into certain level of certainty and safety for global large scale investors. And then we have the next category, which is currencies and FX. So on currencies and FX, what are we looking out for right now? What is going on right now? And we're going to use the Euro US as a case study, right? More like the odds for a rate cut coming in Fed this December, it's more on the high side. And definitely, I've been looking at the economy, the US economy, and everything happening. A lot of us are all expecting it. So definitely, what happens is for that to be priced in for, or a case study where that is being priced in, is that the US dollar is definitely going to be on a downward pressure. This tends to boost more dollar price commodities, definitely like gold being bullish, and more about a lot of conditions. And I think I read somewhere in the early hours of today about what is happening in the case of the history of Japan, right, in Asia, and which they've been like the major carrier of the world, whereby there haven't been any form of rates with it. They've been with the carry trade as well. The carry trade on that has been through it, and a lot of countries, first world countries all over the world, have been thriving on that. And there's a possibility that with the increasing depth of the US and also the increasing depth of the Bank of Japan as well, we could get to see funds flow out of the US because they've got large quantity of investment in the US as well. We could see a lot of those closing down of a lot of those investments and taking it back to recoup the debts they have over the past 30 years now, a long time. And that is going to weaken. So the more we're getting like a softer dollar USD, the more we're going to have favorable FX, right? Because it's like indirectly supporting global demand for both commodities and crypto for people who are like non-USD investors looking for diversification and all that put together. So, but however, what we want to look at is for crypto, right? With crypto, because right now we've seen crypto being under pressure. Bitcoin is dropping so bad, near 5 to 6% recently, dipped heavily. And just like I've been saying, from one asset class to another, each of this flow. So we're like having a downward stream effect, right? Whereby yields are going up. So as long as yields are going up, that is not really, really good. And there's a lot of risk of equities, right? People are diversifying into risk of equities as well as metals. And for crypto to really, really rally in December, we want to see a confirmation of Fed easing. And it's a good thing that we have Powell speaking around, is it 12 a.m. now? 12 a.m. or 1 a.m. It should be 1 a.m. in the Tuesday on the 2nd of December. That is tomorrow. We've got Powell speaking, and Powell's speech, a lot of it's like red folder news, and a lot of traders always look forward to that. So if his speech could leak out some confirmation of Fed easing, that could really, really, really have a lot of impact in crypto as well. We need that confirmation. We also need a lot of macro data that shows weakening recession, right? And more of institutional inflows coming in right now. These are all going to literally help. So more in summaries, right? Looking from one asset class to another asset class, bond yields are firm. So a lot of income seeking capital goes there. Equities and crypto are under pressure. A lot of people are looking at the risk of sentiments. And for crypto to really, 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 really rally, we need the rate pivot, right? That confirmation is needed. We need a renewed risk on sentiment across the board, across the market. And then we start looking about liquidity rotation from fixed income assets like bond yields and safe haven commodities down into crypto. And that is why we've got to see people talk about there's a time that gold is going to like peak somewhere and start coming downwards. All that thing that people get to talk about is all aligns with it. So there's like an inverted flow, right? Bonds, then stocks, then commodities, and then cryptos, right? So it's still that bond and commodity phase right now, but December could be really pivotal if macro conditions, right, like I am saying, comes into being, and is that helpful for it. Okay. I want to share the screen now. Let's look a bit about technical. So I'm done reading the market update analysis. In summary, how to type on AI to summarize it a bit for me so it doesn't look too lengthy. Okay. So let's look at the DXY. The DXY, and then we're going to look at USD.D. So let me share that. Okay. So I think somewhere, if you look on my X, I think I tweeted something that was like, check it. I mean, X Shifu Wealth. For some weird reasons, I don't know why. I don't know if it's work. Okay, so that is that for the, what's it called now? Talking about the dollar and then the correlative effect for similar assets classes, and let's look at the, what's it called now? Let's take a look at my the crypto section, and let's see what could possibly be happening there on that side of things. So this is a very tricky one, right? Because when you look at the fundamentals, they aren't aligning as you want to expect. So it's a very, very tricky one. We've got to see the surprise and it means the market keeps on being bullish, right? And continues going up. So what you want to see, because if you look here from the perspective of to March 2024, the market has been bullish, and then from here, November, September 2023 also, we had another amazing bullish run in the market. Bullish run in the markets, and then coming to this year from April down to like August, we also had a bullish run in the market. So whenever we get the rises a run in the market, and if I'm being very honest, looking at this from the without any form of prejudice in terms of having like that fixated buyers, right? Not trying to have I really don't like as I'm struggling with this what's it called now? I'm struggling weird and abnormal. I don't just understand what's going on. It's kind of fucked up why it's acting. So I have to I'll have to what's the kid now? So I think if it doesn't work, I'm just gonna like back out for today and then probably continue tomorrow. I think I've done my best so far. Done